Hi, everyone. We are Facebook Lending, the premier peer-to-peer lending platform to change the face of modern lending. I'm Claudia.
I'm Taylor.
I'm Mia.
I'm Nick.
I'm Kaylee.
I'm Matt.
So let's jump into it. So today we're going to be going over the overview of Facebook lending, the problem that we found with traditional peer-to-peer lending, our solution, our business model canvas, our financials, our CIS component, and our marketing. So we will go over a quick how-to. So we're planning to empower people to achieve their financial goals with the help of a platform connecting individual lenders and borrowers all over the world through a pre-existing social media account. So like I said, we're a peer-to-peer lending platform under the Meta Platforms umbrella with our key partner Experian. Really, we're just leveraging borrowers and lenders with Facebook's 3 billion users to achieve financial goals. Our 4 objectives is 1, to eliminate the middleman of traditional lenders and banks. 2, provide borrowers the opportunity to achieve their financial goals where they couldn't have the means to do so through a traditional lender. 3, give lenders the opportunity to make a quick and easy return on an investment. And 4, help users increase their financial literacy through our Facebook financial course. So a little bit more on the Facebook lending process as shown in the video. First, users will make a Facebook lending account. Experian will then verify your identity to make sure there's another human on the other end. You then will take the financial course. Borrowers will request their amount needed on the board, where then lenders will bid on their proposed terms. Once a borrower agrees on their desired lender, they will sign a contract. Facebook then will take a flat fee of 3% of the principal loan, in which Facebook will then manage all payments to the lender. Once repayment is complete and the term is complete, Facebook will boost the ratings and close that account in those transactions. Next, I'll hand it over to Kaylee to talk about traditional problems.
Thank you, Claudia. So as you saw in the video, John just got a new job. He is going to be needing a new vehicle for this job because it is going to be a commute. A little bit about John is that he is a middle-aged man, but is no stranger to using credit. However, in the past, John has filed for bankruptcy, which led to a substantial drop in his FICO credit score. And because of this, John feels embarrassed by his credit history. Therefore, the task of going to a bank is scary and unattainable. John has pretty high criteria for how he wants to borrow his next loan. For example, he doesn't want payments that are more than what he previously agreed to, or having to speak to multiple different people about getting a loan. He doesn't want his credit hit for multiple unknown reasons. And lastly, he wants to feel in control of all of his decisions. Now I'm going to hand it off to Mia for our solution.
So thanks, Kaylee. So John came to Facebook Lending when he signed up. He was surprised that there were no additional fees or any hidden fees. So he educated himself through the Facebook Finance Education course and was able to share what he needed financially, which led to lenders responding by offering loans, and with all different interest rates and different lengths. So this was a great plan for John. Even with a low credit score, John was able to take out a loan and decide on which one best fits his financial needs. So now he feels like he has more control over his financial situation. So how will Facebook Lending specifically fix this problem? So we offer bids on loans, so that way borrowers have the opportunity to decide what loan they would like to take that best fits their financial situation. We also have mandatory background checks and social security to match with their Experian credit score to verify that there is a person behind the screen, and it makes the platform more secure. We also have no hidden fees, and users will not feel like they are in the dark. We also provide a Facebook finance education course, which will educate borrowers and lenders on how to use our system and educate them on what loans do, and that way they feel better prepared. And we also provide additional resources for them to learn more about finances. So our BMI, our business model innovation, we have our what's valuable, rare, imitable, and non-substitutable. So for V, we have what brings the world closer together. There are billions of users all over Facebook, and it is one of the biggest platforms there. So rare, the amount of connection between the amount of users on Facebook is rare, and there is no other like Facebook. For the I, it guarantees a level of financial sustainability while being free to users. And for N, there's no other platform that has as many users or the familiarity brand that Facebook has created. So some of the challenge dogmas that we discussed is the credit lending process. So we are getting rid of the traditional loan process through banks, and we have brought an online process, and it's one of the first bidding systems. And through our credit score, it challenges the dogma that you have to have a good credit score to take out loans. So this is considered a sustained innovation because peer-to-peer lending is an already existing platform. So essentially, this is an improvement on something that is already existing. So now I'm going to hand it over to Nick, and he's going to talk about the financials.
So when talking about our competitive advantage in this, Facebook's an already existing platform. So we believe that implementing the new software will be cheaper for us because we have in-house staff, which is cheaper than outsourcing to an outside firm. So looking a little bit at the revenue projections. So we believe that implementation will take approximately 1 year and will take about $52 million. And then so for revenue projections, so we're focused on the 190 million monthly active users in the United States. So we project that about 1% conservatively we use the platform annually, one time for a loan of about on average $3,000. And so that comes out to $5.7 billion in annual loans on the platform. And so we would take 3% of those, and that would come to 171 million in gross revenue. And then after subtracting out costs, we would get net income in the second year, which would be the first year of after implementation of 20 million. And then over a 10-year period, this returns an IRR of 75%. So we believe that is a really nice return. And it will also diversify Facebook's revenue because they make currently 98% of their revenue off of digital ads. So we believe if we can diversify this, this will be very beneficial for Facebook. I'll pass it off to Matt to talk about CIS.
Thank you, Nick. So it's no secret that Facebook has had some issues with privacy in the past. So with Facebook lending, we really want to focus on improving privacy practices by focusing on user anonymity. So any information that users upload will be voluntary outside of the credit check and the social security, which we're just using to verify identities. We want to securely and temporarily store user information so that people won't have their date of birth and other information that's they could feel as sensitive out there on this platform. We don't want to sell this information to any ad agencies because that's what Facebook normally does. And we want to really focus on privacy so that people aren't constantly being bombarded with different things. And we want to provide a high level of data encryption for user information. So the way that we're doing this is by implementing a firewall software that's developed by the in-house Facebook engineers. So it's a 256-bit encryption. Basically, that means that there's a huge number of combinations that would take years and years to crack. So any hacker would have a huge amount of trouble trying to do that. And then we're also implementing all the regulations that come with credit bureau information checks, such as anything that comes with social security numbers. And this is all regulated by the Fair Credit Reporting Act, which allows users to have the name and agency of any reporting, or name and address of any reporting agency that their information is sent to. So now I'm going to turn it over to Taylor to talk about our marketing.
Hi, so I'm going to go over our customer analysis real quick. So of course, with our borrowers, we're really trying to target the middle-aged men and women between ages 30 and 49. This is because those are Facebook's main users. And this is for Facebook users that are looking for financial stability. And it allows our target market to receive help without the long-term repercussions. And then for our lenders, we're looking for them to be ages 35 and older. This is because they all have probably established a career and are financially stable. And it's for people who are trying to lend out money and have experience in the business world, so they already kind of know how the lending process works, as well as they're looking for an opportunity to earn interest and gain more money. And it can also be useful for people who see a traditional a flaw in the traditional credit score system and are willing to help those who are in need. And then lastly, here's just a quick chart about our top competitors. As you could see, with them, it is dependent on your credit score whether or not you're going to get that loan or not. Unlike Facebook lending, they also all have a minimum and maximum amount of how much you can lend at a time. And interest rates already set in place due to your credit score and how much you're lending. As with Facebook, it is negotiable through the bidding system between the borrower and lender. Thank you so much for listening to our presentation.